So today I'm going to talk to you about earnings season. So every trade, every stock will have an earnings season every quarter, and that's how the life cycle of these companies work. They will release an earnings report, and the earnings report would meet expectations or like not meet expectations, and the market would then react to that particular event. Now, the important note here, and my rule in trading, is to avoid trading earnings seasons, especially if you're in a swing trade. So what I mean by that is, say you were trading. I'm just trying to think. Amazon, and Amazon was, you've kind of bought it at the right time. So say you bought it over here, and Amazon's heading up, to this, to say this new level over here. Now, you don't know if Amazon's again going to go up or it's going to go below from this level here. So this is where the earnings results come in, and this could be earnings for Q1 of particular year. So the important thing to keep in mind is if an earnings report's coming out here, and a lot of the analysts will give you like sneak peeks. Oh, we kind of estimate it's going to do this. It's going to estimate it's going to do that. But if the results come out, my advice to you is to sell just before it comes out, and you could always buy back if it comes out better than expected. And the reason being that if the earning call comes out and they have Amazon, so this is Amazon, has made a lower than what they've estimated, the actuals are lower than estimated, you'll see a 10% drop, and in a pre-market, depending on when do they release it. So in the stock market, you could trade between 9 or 9:30 to 4. What the stock companies do is that they will release the earnings at 4:30 p.m. or they would release it at 8:30 a.m. or something off market hours, so they don't see a big volatility. Some of them do it during like trading hours too, but they prefer doing it outside to prevent these kind of reactions from happening. So what would happen is that by the time you get a chance to react to the news, the market's already tanked down to the bottom, and you'd make a loss. Now, in some cases, it could even, if you bought it somewhere over here, and this is where you're sitting at, and then you'll kind of tank it down, or sometimes it'll actually go down further, and then you're kind of stuck in a bigger loss. So my advice is my rule is never trade into earnings, especially if you are a swing or a trend trader. So this applies to trend or swing trading, because it could just derail the swing or the trend and then bring it back to ground zero, or maybe in negative territory as well, depending on where you purchased it. So I hope this was helpful. This is just a small tidbit, but an important rule, because a lot of you may be always wondering, should I buy or should I short into the earnings season? So for shorting too, as I talk about buying the same applies to shorting as well. If it comes better than expected, the market may just rally up. And sometimes there would be a lot of volatility while this news comes out. And what that would do is that if you had a stop loss, say over here, it would trigger a stop loss and then again go back up. So it's better to stay away. Once the results come, you know what's going to expect, and then you can just ride the trend wherever it's going to go. Now, the markets also don't just if the results come good, it's not just going to be okay, the results are good, I'm just going to continue my trading. No, it's going to kind of go up for a few more days after that. So that's where you could multiply your returns by stepping into the market after that, because it could go up it's a quarterly result. So you've got an entire quarter before you could see some, it's not going to go up the entire quarter, but it'll gain some momentum from there as well. So I hope that was helpful. Do apply to your trading. Tell me in the comments if this was helpful, if you have a different strategy in which you would you trade earnings. And this is only for swing and trend traders, not for day traders. Day traders would like to leverage these results to gain from the market, so it's not for them. So yeah, happy trading, and I'm wishing you to you be more successful in your trading journey by adopting some of these tactics and rules.